possesses the entity beyond all self-existence. This is the listening shadow.
Cheers to Catalyst's retail trading team. This is Mastro coming to you live from Puppet Show Central with your routine briefing. So it's a potentially fun-filled day that may or may not shake things up here. Astoundingly, we are seeing once again the same thing we see every day: the buyers coming in and just buying the dip at the open. So we'll look at what's potentially going on in terms of the imbalance, maybe help explain how this is predictably happening once again, and maybe looking at levels that we might turn around. So we're going to jump into the warm up, so we got going there, and we will go from there. So jumping right into the warm up first. The first thing that you'll see is that same thing as yesterday, that overnight inventory was down and imbalanced net short to the sell side. So again, deja vu, Groundhog Day, same old, same old. They sell it off during the night very aggressively. We come back in the morning and we buy it back up. So we talked a little bit about, or I talked a little bit about the imbalance yesterday and kind of what's going on there in terms of the move toward potentially fair value. And we'll look at that in the execution chart in just a second here. I just want to get through this warm-up document first. So the first 30 minutes, what are we seeing? You're seeing an open drive, which is the most bullish type of open, where the probabilities of even revisiting that opening price of 46 is usually lower. So we have actually a bunch of stats, I think, to look at today. So the first is going to be a very basic stat around gaps. So we gap down from the close more than 30 points from last night. And those gaps have, according to my statistically gifted friend Juiceball, about an 18% of filling in the same day. So that's the first stat to keep in mind. The second stat is my personal favorite stat. The overnight high or overnight low has a 90% chance of touch. Okay? So you have those two stats to work with today. And then finally, you have the open drive. So I don't really have exact probabilities around the open drives, just kind of a basic heuristic, I guess would be the term, which has a low probability of being revisited once it prints. So we'll see if that holds. Something's got to break. You have an 18% chance of filling that gap. You have a 90% chance of overnight high or overnight low, and then you have that open drive. So do with that what you will. I think it's just telling us that pretty much anything can happen, and that really makes, I mean, that's every day in the market, but particularly today, it says that we could very well, I would say you have a decent chance of unwinding that open drive to go lower, yet at the same time, we could just as easily go all the way back to our favorite level of about 70, which is right near that overnight high is, 74 if you want to be specific. So we will see what happens there. I just think it's interesting what we're seeing today, in that it's extremely predictable. I think everyone and their mother said that they're probably just coming to buy the dip, and that's exactly what they did. I'm sitting short personally, although I did get a long signal, by the way, at 54. I'm going to be stubborn today and sit on it at least for a little bit. So if I lose money because of it, well, that's my own fault. I just don't foresee. Um, well, I shouldn't say I don't foresee that because I don't really foresee anything. But I'm, like I said, going to be stubborn. Sorry, I was about to say because volatility is holding on, right? As I said that, it kind of gave it up. So, um, yeah, well, let's just look at the price action and go from there. The levels are on this chart here. Really, those are the four that I'm looking at today. Intraday here, as we start to reverse, I will actually add. I'm going to add it right now. Another level at about, what level is that there? 57. So we'll put another one here at 41.57, looking for a potential fake break there. But yeah, I'm going to be stubborn. I almost never break my mechanics, but today I'm going to. I will put, regardless of what happens, I will put the Fabio results out on Twitter, as I've been doing the past couple days. I'm going to start doing that. So that is kind of the control. So we'll see how the control performs versus the human today. But the human is going to be short, and unless something really spectacular starts to happen. So we'll see that. We'll look at volatility, and I'll show you kind of what I mean. That's something that might change my perspective there. But first, let's hop into that execution chart. So again, this warm-up document, it will be updated throughout the day. Right now, I'm looking at kind of that rotational TPO. That can change. It changed 3 times yesterday. So if you're interested in finding out what happens there, just come visit this document. It's the link in the description. You can come check that out as the day progresses. Stand by. We may be getting that lovely little false fake break. We'll see what happens there. So 41.57. 41.57 is kind of that level. Again, I'm not taking it. I like to take, in fact, I'm going to take it off here just to keep things consistent. These are the 4 levels that I take. Very specific: overnight high, overnight low, priority high, priority low. But if you're looking for kind of that potential breakdown here, that 57 number is pretty good. But I'm going to keep it out of there. So anybody who's tuning in, you'll get that level and you won't see it in the warm-up document. So hopping over to our friend, the execution chart, let's look at the cool little thing that happened with the imbalance today. So I'm going to go ahead and minimize time and sales here, expand this window, and so we can get a nice view of what I'm going to just go over real briefly here. Okay. So the way I draw these profiles, I draw it from, I draw prior day extremes and then overnight extremes. So here's what we're looking at from one overnight extreme to the other before things got really cooking today. I'll move this line out of the way just so we can grab that profile. So if you notice here, I'll draw a little ellipse. Very junky looking profile. Lots of space between the kind of ledge there at about 65 and the top of what was value when that low was put in. So what happened as the session progressed? Go back and grab my handy dandy profile right there. So watch what happens to that area in the ellipse. Price pushes in there, it wants to seek that fair value. So there's no time and volume between that 65 and 53 levels. And so given especially that imbalance in the inventory, it makes a lot of sense to go explore higher and kind of find where that volume and value starts to build out. So as the day progressed, coming to where we are now, especially with that shift up in, I'm going to move this all the way out here, that shift up in value, which is a gray area, and the shift up of the POC, it seems that we want to transact around this 41.57 level for now. So there's still a nice LVN, about 5 points. There's still 5 points of space, I think, to potentially fill in before you start reaching that important resistance, I think, for the bears at 65. But right now we're kind of in the middle of that range. And yesterday, my whole thing, I posted a couple times on the Twitter, was 41.90, 41.50. The battle of this range is going to dictate, I think, the next trend move. And right now we're kind of obviously near the bottom of it, but the bulls have not yet rolled over. And what does that rollover look like? It's going to be a push back below that 46 level, which was the open dry. That's where we opened. If we can push back below 46, I think you might see some sustained downward movement. I'm going to close at about 39 here. That is just a level that I see potential support, but we could easily go to 20 and lower if and when we do take out that 46. So you got to assume bullishness if you're being objective and not trying to crystal ball it. Again, I am definitely trying to crystal ball it today. We'll see if it bites me in the behind, as they say, or if it works out. But that 46 levels is what's going to be key to watch moving forward through the day here. So I just wanted to give you a better explanation of that imbalance thing because yesterday's was choppy to say the least, and this is a really, really good clean look so far today. So again, I think there's still room for the Bulls to run. Um, Heck, they could run all the way to overnight high. Keep in mind that those first couple stats from the beginning of the briefing here, that 90% chance that we touch overnight high or overnight low. We don't know which one. I assume the low, but could definitely be wrong. So yeah, so that's what I'm looking at in the execution chart, and this can change as the day progresses, but that's what I'm looking at right now. We have some Fed speakers. I think 11:30 and noon are the big ones. Let me go ahead and check here on the other screen just to confirm. Today is Thursday, and yes, so Janet Yellen, I don't know if she's speaking. 10:15, it said she spoke. I didn't really see too much movement in the market there, but you really have a red event, which is super important at 11:30 here with the Bank of Canada Governor Macklem speaking then, and then FOMC, U.S. FOMC member Waller at noon. So 11:30 to noon, things could get a little spicy, and we'll see what happens there. Again, watching our key levels. So moving on from our friend the execution chart, let's pop on over to the macro look here and see what we got going on. And really not much. So we're in the middle of the range, in the middle of the rising wedge there, and nothing really to bloviate on here. I think the levels remain the same. That high from yesterday is going to be our breakout point. Obviously, always watching for the fake break at first, and then that low from let's see, 1, 2, 3, 4 days ago. So we look at our SPX chart here, that low at about 40, which is where I'm going to take my position off here in case that they do not break it, but that low of 40 is going to be super important. I think if you start to see some time and volume build below that 40 level, I think you're going to see a pretty quick move to 20. 20 is important and strong support. 4120, this is on the ES, is important and strong support. And if that fails, we go to 4100. I do not see 4100 as a strong support anymore outside the psychological level just because of how many touches, but that'll be the two key levels. So really, it's pretty choppy all the way down to 40, as you can tell, as it's been. Yet once you start to see the time and value build under there, I think it's a pretty quick move to 20. So we will see. There's a lot to get through, and right now we're trending up, so that downside is irrelevant. So we're really looking toward that overnight high first. So, one second, I'm making sure I called that. I promised yesterday that I would look up the 8 essential chart patterns that I like to keep track of here. So, making sure that that was the correct call. This is and by. Sure, it's a wedge and not a triangle. Yes, it seems that this is indeed a rising wedge. So there you go. As I'm speaking, we're starting to make higher highs, filling it out some more. Just again, unsurprising, making sense to kind of fill in that empty profile. So we'll see what happens. But yeah, that's the macro chart again. Not really much to see there because we are kind of in the middle of the range. So we look at the TPO, which is more granular and I think a little more helpful for our purposes as we continue kind of consolidating around the single from the overnight session. Those singles, which is why I'm always looking at them, often act as decent support or resistance levels, obviously zones more than specific levels, but you can see that's kind of we're consolidating now, still just kind of filling in some of that volume. So I do think that it's we could potentially still go a little higher here. The bear case is not really over until we take out that overnight high. Really, I think once you start to build time and volume above 64, the bear case is probably over. I have to eat my words and take my scratch on my short. So you can see that there. Let's say 68.50 is kind of that naked, untested POC. Once we get through that, I think it's open skies back up to this island value area that we have on the upside here. And then once we get through that, obviously moving through that high from yesterday and potentially finally breaking us out. But you can see we do have a decent amount of supply, really from, I'm going to say 85-ish, 88. Let's say 88, yesterday's high, 88 all the way up to 2220-ish can definitely be a supply zone. So it looks like that very often with this April consolidation, it looks when the market looks like it wants to break out, it just gets either popped back up from the downside or popped back down from the upside. Yes, thank you, Sherlock, for pointing that out. But I'm just trying to say that there's still plenty of supply. But once we do get above 20, that's when I think you start to see that big breakout and maybe a good 50 points. So remember, I'm going to keep harping on this until we do break out here. This has been such a significant and extreme consolidation. When we do trend, whatever direction that is, it's probably going to be a big one, and we're probably going to see a wide range expansion once that happens. So just kind of be mindful of our key levels, and once we start to break them, I think there's a really good breakout opportunity one way or another. So that's really to the upside. So I'm looking at right now because we are still above that 46 level. So again, where this TPO begins, that 46 level, until we get below that, the bulls do have control of the auction. So today's pivot, I'm really going to have to say, is probably going to be around, I see it much more as a zone, actually. I think it's this 55 to 65 zone in the ES. I want to give it a little more time. I want to see what happens when the news comes out. I'll note that in the newsletter. It's not as clear as yesterday and the day before. It was that 41.55 pivot in the SPX. Today I want to give it a little more time and kind of see how the price action behaves as it continues to fill in this imbalance. So on the downside, the one level before 41.20 that you might want to look for a potential turnaround is going to be the single here at about 41.33. But once again, I think that just the momentum of any time of volume below 40 is going to take us to 20 first, because 20 is just a important level from the overall distribution starting in the beginning of the month. And it's kind of where you can see you have a lot. That's what these bars are here. That's buy delta and sell delta. You have an imbalance there that I think will be addressed. So that's why I'm looking at 20, and those are really the major close levels that I'm watching today. We'll look at volatility, which is going to disappoint the bears because I've been looking at it out of the corner of my eye. That's why I keep kind of stuttering, because it's starting to lose its momentum pretty extremely. It's falling back into this channel here. So this was the descending wedge that I have been watching for weeks now, and volatility is trying to pop out of it. So it's all is not lost. We're still kind of consolidating around it. We haven't fallen back in, but really what the bears want to see is us to hold above 90. And you saw the rejection there, and really as we start to fall through, I think much lower, and the bear case gets quite a bit weaker. So this consolidation is kind of what I'm watching. Like I said, I am going to stay short here for a little bit. But if we start to lose 50 and you start to see that really sell off, we pop back towards the middle of that wedge, well, the bulls may very well win the day. But again, it's all about this 11:30 and 12 o'clock news. I think that just especially that 11:30 news, it's a red event. I think we have to wait for that to come out and see where it takes us from there. So definitely a mixed bag today. I think it's very level to level. It's just really watching. It's all noise from here, from 41.50 all the way up to even 41.90. Obviously, bulls are looking good for now, but it's all noise until we break out of that range one way or another. So that is all I have for you. On the price action front, we'll go to the execution chart one more time to watch some of this fill in. You can see it right here. I'll actually bring the oval up just a wee bit. Watching what happens as we kind of go after this ledge. So right there, that ledge is at about 65. Not at about 65, it's right at 65. So watch what happens. So I hope that you enjoyed today's content. That is all I have. I'm going to send the newsletter out right after this. You can follow that, engage with that if you want. I'm also available on Twitter. That's where I like to hang out. So at Routine Trader, if you want to come engage there. And of course, you can just go ahead and put a comment in the comment section of this video, and I will respond. I appreciate any and all engagement that I get from you, my dear viewers. And if you did enjoy today's content, I would appreciate you giving it a like. That helps with the YouTube algorithm. And yeah, I'd appreciate that. So, in any and all cases, tomorrow's OPEX. Thank God. Probably going to be another sloppy day. Those expirations are usually sloppy days of trading, but I'm hopeful that on the other side of it, we will finally get some sustained, interesting, and more tradable tape. So we'll see if that happens. But regardless, stay classy until I talk to you tomorrow.